My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. The people make friends, just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. This market, what can I say? It's got a real keen eye for the obvious. It feels like you can just buy the news and consistently make easy money. Easy money, including today, with the Dow rolling up 104 points, S&P edging up just 0.09%, NASDAQ advanced 0.07%. Now, historically, you had to buy before something good happens and then sell into the news. The smart money always loaded up and crushed bids when stories broke, often leading to big losses for anyone who bought the news. I should say anyone uninformed enough to buy the news. Not this market, though. The new pattern is insane. If you got experience, it works against you. That's right, because it's making fortunes for the newcomers, for the new people who are investing. And I salute it. Let me give you some examples. They're classic. Okay, let's start with Nucor. That's the nation's best and largest steelmaker. Now, we own this one for the Charitable Trust. We've written bulletin after bulletin about how Nucor could be a big winner from the passage of any infrastructure bill. But the stock's been very tough to own. And if you tried to trade it, you got clobbered. Now, I've been defending Nucor as the best and cheapest way to play a recovery in auto sales and construction. I didn't even bother thinking about the infrastructure bill anymore because analysts after analysts downgraded the stock, arguing that the good news on the infrastructure front was already baked in, so forget about it. These professionals would have been right if we had the same kind of institutionally dominated stock market that we've had for the past 20 years, but we don't. In the old days, once we found out that Congress had finally passed the infrastructure bill, you might have seen Nucor stock open up, say, a point or two before the heat-seeking sellers came in and lit up the buyers, taking furious profits. In the end, they might have blasted this thing down to below where it was a week ago. Oh, but this is a new market that's no longer totally dominated by big institutional money managers, not at all. Individual investors got the power. So when the bill actually passed, sellers were non-existent. Not since the opening, Nucor jumped 5 points. Now, then some selling came in, but rather than crushing the stock, more buyers came out to meet them, which is how Nucor ultimately finished the day at $4 or 3.6%. I got to tell you, I haven't seen anything like this individual investor movement since before the dot-com crash in 2000. It's been that long. Who's doing all the buying? I suspect it's you, the home gamers, or as they're derisively known on Wall Street, retail investors. Retail meaning nobody, not on this show. Now the retail, you running circles around the professionals, and I salute you. See, Nucor was too obvious for the pros. Regular investors, the individual investors, they no doubt wanted to be sure the bill would actually pass before they pulled the trigger. Then they started buying hand over fist. And you know what? I don't even think they're finished. Then there are the rock stocks. Okay, this is a great story. These are the companies that make aggregates we need for road building, and I'm talking about Vulcan Materials and Martin Marietta. Now, these stocks have been going up ever since Biden won the election a year ago. Why? Because he campaigned heavily on infrastructure spending. I've tried to get people into these stocks, especially Martin Marietta. But I fell in the same trap as the so-called smart money. When Ward and I, the CEO of Martin Marietta, came on the show in late May, I was worried that the infrastructure bill was already baked into the stock, given that it's up roughly 29% year to date. Stones. So instead of the huge piece of federal legislation, I focused on state road building. I mean, who didn't know that the aggregate companies would make a fortune from the infrastructure bill? I say that like it's a rhetorical question. But there's a clear answer. The public didn't know. Now Vulcan and Martin Marietta are flying again to the point where they sell for 35 to 41 times earnings. These are companies that make rocks, for heaven's sakes, not metaverses. This morning when I got up to work out, I saw the Caterpillar was up 7 points. I couldn't believe my eyes. I went to go change out my contacts. I mean, didn't you have to buy Cat last week so you could sell the news today? No. These infrastructure plays all have too much follow-through. It's almost like, hey, I see the tractors and backhoe loaders and excavators. Let's buy some. Hey, it worked for Tesla, didn't it? Well, it's working for Cat. Not only that, it also works on Deere, because Deere has some backhoes. Remarkable. Hey, backhoes. Let's buy the stock. Now, it's not just infrastructure either. Look at AMD and NVIDIA, two of our favorite semiconductor stocks. Now, I've praised these companies forever. I think AMD will keep taking market share from Intel. I've been saying that since it was 5. I see it as the preferred high-performance chip maker. We own this one for the Charitable Trust, and anyone who gets the bulletins knows that we've been recommended because of a big product introduction that was coming out today. Then this morning, we learned that AMD won a big contract from Facebook to use its hyperscale chips. Now, that should not be a surprise if you've been following the story. But most people obviously weren't following the story, which is why the stock surged 10% today. As for NVIDIA, this is a $308 stock that we've been championing since the stock was in the 20s. Jumped another $10 today. But get this, tomorrow, CEO Jensen Huang will give his keynote. Now, this is perhaps the most important speech of any tech executive, maybe any CEO. If I'm right about how stocks keep winning on the obvious, then it literally will not be too late to buy NVIDIA stock tomorrow. In the past, the professionals would have annihilated anyone who stuck their head up to buy the stock after it's 136% run up. I mean, come on. You can just see the pros mowing them down. Now, though, the home gamers are at the wheel, and they're being rewarded for owning great stocks like NVIDIA, not flitting in and out of the mix every big announcement. What else? We all know that international travel restrictions would soon be lifted, right? I mean, you and I both know that. We weren't quite sure when. The company most linked with international travel is American Express. Don't leave the country without it. I've watched the stock go up endlessly since it was reported, knowing that much of the rally was about people who recognized that pretty soon the White House is going to lift restrictions. They expected a typical sell the news reaction once that occurred. Well, sure enough, buyers came flooding in today. The stock was up $3 on the removal of the restrictions. Finally, the most obviously obvious, the electric vehicle and charging station plays that are subsidized by the bill. Now, we saw the stocks of companies with attractive electric vehicles run into the infrastructure bill passes the whole time. Think Lucid and Fisker. Take a look. They were up almost every day in the last 2 weeks. Doesn't matter which charging station name you bought going to the weekend. They were all rallying, and then they all rallied big again today. Honestly, I would ring the register on the charging station plays because the subsidies are so far away. But I hesitate to name them because their stocks will probably keep roaring, making any profit takers look like idiots in the short term. So let's put it all together. Whenever you hear about the myriad professional money managers who are underperforming the market, it's because they think everything good is too obvious, everything like this. So they end up betting against these stocks. They're probably short every single one of these companies. Every name. But the bottom line, the professionals keep being wrong because these new buyers aren't used to the cynical trading ways of Wall Street and retail that they can pick off. These new individual investors, the home gamers, they hear good news, they buy good news. It's a new world, more straightforward, less pessimistic. And you ignore this optimism at your own peril.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.